Welcome back to Fast Market, everyone. Kevin Hinks back here for our second segment of the show. Joe Mazzola has agreed to stick around for the rest of your show and help me out. I appreciate that, Joe. Now I'd like to bring in the research analyst from LikeFolio.com, Mr. Harrison Sweeney, the show. He's going to talk about our second stock in our Left for Dead theme today. Harrison Sweeney, thanks for coming on. Virtual healthcare. Harrison, we're talking about a lot of names with a top left to a bottom right chart, but you guys think that this one has a little life left in it. Tell us what you got in terms of LikeFolio's data on Teladoc.
Well, first off, I'd like to say that I do love the theme. I didn't know about this prior to the show, but this stock definitely fits. I mean, if you talk about stocks that have been pandemic hyped or were pandemic hyped, I'd say telehealth in general was probably up there, maybe even more hyped than things like streaming services and delivery companies. So it's definitely been a top right to bottom left, or excuse me, bottom reverse those. Anyway, though, what we're saying is What we're seeing here is, the demand has died down overall for the company relative to that hype-driven high that we saw in 2020. But there is something that is particularly interesting that we've keyed in on for Teladoc, which is their exposure to this growing mental health treatment space, particularly online mental health treatment. So you can see here on this chart, this is a sampling of key mental health related trends. And on the bottom there, you can see improving mental health and mental health concern. Both of these are people talking about being worried about mental health problems and then also a desire to improve their mental health. And they're just dominating on this chart. It's more than 75% of the total volume, surpassing things like just visiting the doctor's office and people complaining about healthcare being expensive. And it bears out in other data, not just our data. You can look at just samplings of U.S. adults. I believe it was over 20% in 2021 were diagnosed with some kind of mental illness. And I can say anecdotally among my cohort that there is definitely a rising comfort with discussing mental health issues and a desire to get treatment. I have seen numbers as high as 30% for the 18 to 25 age bracket. So this is definitely a rising sector and something that is seeing a large amount of demand growth. And Teladoc can actually stand to benefit from this with their 2015 acquisition of BetterHelp. This brand they focus on online therapy and mental health treatment. And the purchase intent chart for BetterHelp is actually outperforming the total company mentions for Teladoc itself. This is probably their strongest brand right now. And you can see here that although they did have a bit of a late adoption spike in 2021, and that was driven by they had a very heavy advertising campaign that was helping to drive awareness. And it is maintaining some of that growth. Now, it hasn't maintained that all-time high, but still up 45% year over year, which is promising, especially when you consider the underlying tailwinds of mental health concern just being a rising issue for Americans in general. So this is something that we'd like to see, a powerful tailwind and a brand that stands to benefit. And when you look at that price chart for Teladoc, I mean, the thesis when people were buying it at $300 a share is still somewhat intact. Obviously, they had a very tough profitability wise quarter last quarter, but they still are growing very well. They've yet to not post a double-digit year-over-year revenue growth. Now, of course, it is slowing sequentially, but down here, I mean, it sounds kind of crazy now, but you do think that, considering that telehealth is definitely here to stay as far as just a concept, still very new. So they've got a lot of things to work through and figure out. But Teladoc has proven themselves to be one of the leaders in this young industry, and they can continue to convert on these trends, then the company does have a chance to recover some of what it's lost, maybe regain some of that hype in the future.
So, Kevin, I don't know if you knew this. Maybe this is why you invited me here today, but my wife's a psychologist, and so she owns a practice out here in the Bay Area.
I did not know that.
Yeah, no, you're absolutely right in that mental health and mental health concerns have exploded, really since 21, and in 2020, kind of given everything that people have encountered in the last couple of years, and especially younger people. And I think that's a big trend. And so, Teladoc, they're basically saying that they expect a revenue jump of about 20% this year, and total visits to be around 19 million versus 15.4 million in 2021. I guess my question would be, does this kind of expected bump in demand, does that align with what you're seeing from the mentions count and the consumer purchase intent? Is this a trend that you see that could continue into the future?
Oh, definitely. I mean, that's been one of the key takeaways with regard to just telehealth as a whole, is that you look at it prior to 2020 and it was pretty much a non-existent field. There wasn't any demand for these sorts of services. And now, although things are slightly below what was definitely, you see there in spring 2020, an overstated peak there, we're still maintaining a much, much higher level with regard to just general awareness. I mean, these are consumers talking about using telehealth services, and it's holding at a higher level. In fact, has been showing year-over-year growth in recent quarters. So this is definitely something that is here to stay now, which, I mean, especially with something like a mental health treatment where you're having these appointments, and it's something of even just having to go out with someone who's struggling with their mental health, having to make an appointment, go out and visit with someone in person, that can be a struggle unto itself. So being able to do something like that over the internet puts a lot less stress on the patient. And I do think it's a very good fit for this type of service. And it's definitely growing in popularity. You see a lot of new companies springing up, and there's been some concern about the ones that are heavily prescribing medications. I've seen some lawsuits cropping up regarding that. So we definitely are still sort of in the Wild West era of telehealth, but it is clear that this is something that isn't going anywhere.
Harrison, when I look at a company or something like Teladoc, I think enjoyable, right? Stress-free experience, saves time, saves money. It's easier to do as long as you trust the person on the other side of that screen and you have a relationship maybe already with them. There's no reason that this company can't flourish. However, in terms of their stock price, I look at your consumer purchase intent. Take the volatility of the pandemic out, and this looks like a pretty stable chart that's growing in terms of popularity with some volatility right around, 21, 20, early 22, that went up, spiked up, came back down, but it's settling in, Harrison, at higher levels. Mm-hmm. So the question is, isn't that the right trend? One of their bigger problems, they took a $6.6 billion, I got to get the name right, goodwill impairment charge.
Goodwill impairment.
Someone please explain to me what that is. Yeah, what is that? That's a little hard to overcome for a company that's growing, that shows up on your earnings statement. So, but the trends, the growth of this company is pretty stable in how they're growing, correct?
Yes, and this is definitely just a sector to watch in general. Teladoc is a good bellwether for the entire sector because it is the largest and most visible company right now. But who knows, what could crop up in the future. There's a few smaller names that are in this space. I know, for instance, GoodRx is sort of dabbling in the telehealth space, as is American Wellness, Amwell. They're a smaller player, but this is definitely something where we're going to see more competition coming up, and it will be interesting to see if Teladoc can maintain its pole position right now. And based on the data, it looks like they can. They're still growing. So as long as they can keep those goodwill impairment charges to a minimum going forward, we do like it to the upside.
I'll tell you, Harrison, I'm all for goodwill, but that's a pricey level of goodwill right there, $6.6 billion. But Harrison, we appreciate you coming on, spending your Friday with us. Always appreciate the data that LikeFolio brings to Fast Market. Have a great weekend. Have a great holiday, Harrison. Say hello to everyone at LikeFolio for us. All right, that is